All right, let's start. So I have some great information for you guys. So the reason I wanted to do this, I did this last year, is because half my loans coming in this office are rescue loans, which means lenders are not pre-approving people properly. They're not doing their due diligence. And unfortunately, in some cases, the agent is not doing their due diligence. Or if the agents maybe just did a little bit more extra to be extra careful, it might not have happened. And I'm going to go over why, because as an agent, you guys have the right to ask questions to any lender who you are using for a buyer or a seller, period. Especially if your buyer is using a lender, let's say for me, let's say Robin like is reaching out to me about the pre-approval I did for her buyer and I'm not giving her answers and responding, it's not good. So they should be responsive on either side. If you're receiving a letter and you're accepting an offer and you're the seller side, if that lender's not answering some basic questions to reassure you that they are pre-approved properly, that's a red flag. So the first thing I want to start off with is I want everyone to answer. You all have to answer. How many of you call the lender if you are on the seller or buyer side? How many of you people reach out to lenders? Every time?
Yep, I do.
Yes.
Good. And can any of you share your experiences when you've reached out? Good or bad?
The one I just closed with, it was horrible.
In what way?
Said he would, keep us in contact, the phone calls every week, and never happened.
No updates.
Yep.
Okay. What about Camille or Matt? What are your experiences calling people?
I've had a good experience with a loan officer at Chase in Westchester area.
Okay.
Very forthcoming, explained everything, provided me with the information that I needed to better understand.
Good.
So the client also understood. So great communication with a very smooth transition until we get to the
You're
closing.
muted. You just muted yourself. Or I can't
No,
hear you.
I
There you
I
are.
didn't do anything.
Well, you went silent for a second. I don't know what happened.
Can you hear me now?
Experience. Now, yeah, I can hear you. Can you hear me?
Yeah, I
Yeah,
don't know
you
what
went
happened.
quiet for a second. It was
Yeah.
weird. Like,
So we get to the closing table, another 45 minutes to an hour, because the client's loan was under her maiden name. And so, and all of her identification was in her married name. So they had to go back to the lender and they had to correct the documents.
the day of
And
closing?
yeah,
Oh,
yeah,
that's kind of
they
odd.
did it. Yeah, they did it at closing. Yeah,
Oh, that must have been stressful. I don't know
it
how
was.
that
It
happened
was
because
very
the credit
stressful.
reports and everything, the credit report and everything,
Yep,
and her
names
license.
have to match.
Yeah, that's kind of odd. Any experiences you want to share, Matt?
Had like the opposite, well, poor experience also with Chase. It was an out of state uh officer. I think they were down in Florida. And you actually took over one of the clients that I was talking
Oh,
to
is this one of
about.
ours?
Yeah. And he was even going through like the numbers of, to update pre-approvals with me. And, it seemed like not that he didn't know what he was doing, but he wasn't aware of how we did things here.
Yeah, PA is very different than a lot of states,
And
and you're losing.
it
Yeah,
really didn't seem like he didn't really give me much confidence that he was going to get us to where we needed to be. So, of course, that's why
that's when I stepped in. We got it done.
exactly. So, which was always a great experience.
Thank you, Matt. Thank you. I love working with you too. So here's the deal, guys. We all know this. If you're not working with a local lender, we have two major things in Pennsylvania. I live in Jersey. I'm licensed in Jersey, and now that I'm doing more and more, 80% of my deals are in PA now. And I'm telling you, the taxes and the transfer fee taxes are huge, and most lenders do not know. This is thousands of dollars difference in cash to close. And like Matt, and other loan officers, I mean, agents I've worked in the office, I can't even tell you 9 times out of 10 when I'm rescuing or taking over or they're shopping me, the other lenders never have the right closing costs. They just don't because they're not aware. And I understand that, but they should be doing their research to make sure. This is where you guys come in. So let's talk about, I have a list. I'm going to share my screen, see if I share it right because I never seem to share right. We're going to go over this little list. Tell me if you see a little list. Is it coming up on the screen?
Yep, we see it.
How good is your pre-approval? Right?
Yep.
We're going to go down these bullet points and we're going to have an open forum of input and anything else you guys want to talk about. But this is a great tool. If you want, I can even email you guys this so you guys remember the questions. These are compliant questions you can ask a lender and they should be able to provide you. Some things they're not going to tell you. And I'm not going to tell certain people certain things just because it is a privacy thing, but there's plenty of questions you can ask. So even if you're representing a seller, you're a seller and you're getting multiple pre-approvals. Number one, I'm happy to look at them. Many listing agents have come to me telling me they don't know which one they should go with. What do I think? And I can look at certain letters and tell you right off the bat, hey, that one doesn't look good. This one, because the way they word things and the way they put things, like if they have an interest rate on it, that's a red flag. I never put an interest rate ever because they change every day. So for a lender to put an interest rate on a pre-approval that's not locked, because they're not locked, is a red flag. So we're going to go through these bullet points of questions you should be answering. And then if anybody has input, I want it to be an open forum so we can all help each other. But this is going to be your bulletproof page as a seller's agent and a buyer's agent. Okay. So let's start with number one. Obviously, call the loan officer. Don't be shy. Some agents are like, oh, I don't know what I'm talking about. I don't want to ask them. This is why I made this paper. So when you do call them, you can be confident in your questions. And if they don't answer them or don't know how to, then run because these are general questions. Any loan officer doing a pre-approval should be able to tell you the answers or give you some information. So one, I always tell people lack of response. We all know it. We've all done it. If that loan officer is not responding to you in a timely manner, big red flag. If that's how they're treating you from the beginning, that's how they're going to treat you through the transaction and the closing. So I always tell people, if they do not respond or they're not willing to talk to you, that's a huge red flag. And I, as a lender who's super involved, and most of you know who I've worked with, I'm very communicative, very responsive, and you guys know exactly what's going on throughout the whole process. To me, that's my job. My job is to keep everyone calm and cool and keeping you all updated and working as a team. So that's number one. If they're not responding to you, it's a red flag. Two, verify the loan officer has a current credit report. Huge. It's a yes or no. Hey, do you have a current credit report? Many of my rescue loans have been from people who were given pre-approvals with expired reports. So when I pulled the report, credit scores were completely different and I could not qualify them as they got qualified before. So that's the number one question. Do you guys have a current credit report? If they say no, obviously there's your answer. It's a problem. But you are compliantly allowed to ask that question. You're not allowed to ask, what are the scores? But you can ask if it's current. Okay. Have any of you ever done that before? No? Okay. Number one question. Current
How
credit report.
current is current, Maria?
Current should be within 4 months.
Okay.
Credit reports expire in 4 months. That is the law. So if they say they got pre-approved 6 months ago and their pre-approval, is 6 months old, you got a problem. But even if the pre-approval was done last week, we don't know. We don't know when they got pre-approved. So it's your job, not your job. It's my suggestion to call the loan officer. First, you can ask your buyer, but two, the loan officer, just want to make sure that this is current. When's the last time you pulled credit? Okay. If they're telling you 4 months ago or more, that's a problem. Okay. So that's important for you guys to know. 4 months is the lifeline of a credit report. Okay. Any questions or anything, you guys just stop me, speak up, unmute yourself. All right. This is super important. Verify the loan officer has reviewed appropriate income. For example, if someone is self-employed or works on commission, 2 years of federal tax returns. Okay. I cannot express enough when you have a buyer. So let's say you're having a buyer consultation and you're just chit-chatting about their job, and they mention the word self-employed, or they mention that they own a business, or they mention they have multiple rental properties. Or, oh, well, I just started this new job and I've been unemployed for 6 months. We as loan officers need a 2-year job history. Self-employed is huge. So I have a question. Let's see who knows the answer. When you're self-employed, how do lenders calculate income? Does it go by their gross or their net?
Net.
Net. Is that Ryan?
Yes, it is.
Very good. Net. So as a W-2 employee, we go by gross. So that's before taxes are taken out. 9 times out of 10, buyers have no clue that their income for their self-employed is net. I have gotten multiple deals where people are like, oh, I make 300,000. I'm like, okay, I need to see your returns to see what, you deducted for expenses and everything. Oh, no, I'm good. And I look at the returns, and then I have to explain to them that their CPA wrote off everything. I literally had one buyer. He grossed over 400,000 a year for 2 years, and his net income was $40,000. He couldn't believe it. And his CPA wrote off everything. And it wasn't a big deal until they were starting to buy a home. Another thing so it's really important, self-employed. One thing Movement does that other lenders do not, that I'm aware of. So we have a lot of free services that we do upfront. So any self-employment, besides me looking at them, we actually can get their pre-approval underwritten because it's a special circumstance like self-employed. And we want to make sure that your pre-approval is solid. Movement will do an upfront underwritten. So they will actually act as if we are under contract, and I will need to fully submit it, and they will underwrite the file. And then when it goes under contract, it'll go right back to the same underwriter. I've done this several times for people in this office. They love it. It can be done for self-employment, and it also can be done for variable income. So if I have a buyer who's like 20 hours 1 week, 30, and he's at that job for 2 years, but he's variable, meaning not consistent, it's the law that we average 2 years. So if I'm getting pay stubs that do not show me 40 hours every week, I'm sending that one to underwriting too. And we have to do special calculations. So these two are huge in the mortgage, self-employed and variable income. We do both underwritten, which means I would give you a pre-approval. And then once it gets underwritten by an underwriter, I would have an updated underwritten, and it would actually say, this has been underwritten by a licensed underwriter. I can't tell you enough. Number one, how valuable that is. It's a no cost to our buyers. And 2, how good it looks when you're submitting an offer with an underwritten pre-approval. It'll definitely make your offer stronger. I guarantee it. Every time I've done it, I've gotten the offer accepted. So this is a service we do. So Movement is very big on doing our due diligence from the beginning, even if it means extra time and extra money. We do not charge for this stuff. So you hear self-employed out of your buyer, ding, ding, ding. Think of me and how we can get them approved. And unfortunately, sometimes they're not going to qualify. They've written off too much, but at least you know now before you waste your time. And sometimes I've had buyers where I'm like, well, let's wait till next year and you need to claim more income. And then we just try to make a plan for the following year. That makes sense? So I try not to do a no, and maybe we can do it the following year. And then I'm not allowed to tell them what to do, but I can advise them that they might want to talk to their accountant about claiming more income. Does anyone know how many years we have to average the income for self-employed?
2.
2. It's 2. It's not 3. It's not 4. It's got to be 2. And if there's declining income in the current one, then we have to just take one year. So there's a lot of guidelines here. So it's super important. Self-employed, you are asking that question. You're calling the lender. Hey, my buyer's self-employed. Did you figure out their income? Are you confident that you have the correct income? Okay. Huge, huge, huge. Make or break a deal with self-employment. Any questions on that? Okay, good. All right. Number 4, has the file run through lender's underwriting system? Does anybody know what the lender underwriting system means? Anybody? Come on. You guys have gotten pre-approval letters before. Someone needs to know. What is it?
So the pre-approval is the pre-approval, but there still could be conditions that the buyer is going to have to meet.
Correct. Yes and no. The lender's underwriting system is called desktop underwriting. So some pre-approval letters, especially mine, will say in the fine print that this is through Fannie Mae's desktop underwriting. Every lender in the country has to use this desktop underwriting. So if you're getting a pre-approval that's like looks like it's handwritten or hand typed by a lender and it doesn't have any disclosures on the bottom regarding Fannie Mae desktop underwriting, that is the underwriting system we all use. If I can't get approval in that desktop underwriting for Fannie Mae or Freddie Mac, then that's not going anywhere. That is really important. So I definitely have seen letters where someone just types up a letter and there's no disclosures. And my pre-approval has disclosures on the bottom to show that it's been through the desktop underwriting. Again, it's Fannie Mae and Freddie Mac. You got to be pre-approved through them before you can even do that. Camille, you have a question?
Yeah, so there's recent communication about Fannie Mae not using the 620 score. I may not be explaining this correctly with desktop underwriting. Can you provide some clarity on that, how that works?
Yes. So this is a new guideline. They are not worrying about the 620 conventional anymore and 580. From what I've heard, and Movement is not following this guideline because we just don't think it's a good idea. We feel like first of all, we have to comply, but we also have our own standards, meaning people, I personally think it's crazy to put that out there because that's what happened in 2008. They didn't verify people's employment. Now they're not going to verify people's credit. What they're doing is instead of looking at the score, and I do like it this way. I like the fact that I have so many people who've had exes destroy their credit during a divorce, or they got sick. Something happened where their credit score was not their fault. It happens all the time. It happened to me. And I feel for it, but I'm stuck with the guidelines. The good thing about this is they are going to take all other factors. They're going to be super strict about income, debt to income ratio, super strict about how long they've been at they're going to look at every little thing and they're going to qualify that way. But Movement is not doing that. Movement is sticking with our scores because we have the right to do that and because it's less liability for us as a lender. And we directly work with Fannie Mae and Freddie Mac. So if we, use this, it's called an overlay. So we are definitely not doing that. And just be careful with it because like I always tell people, if it's too good to be true, it's too good to be true. I would be very careful with that new, and this is a perfect reason why we're looking at this paper and talking about how we're asking questions because I don't know how much detail a loan officer will go with you when you ask questions, but you can't ask them what their credit scores are. You just need to really dig a little deeper of, hey, have you pulled their credit? Have you ran it through desktop underwriting? Number 4, has it been approved through desktop underwriting? This is stuff an loan officer should have no problem. So the difference, Camille, again, is they're going to look at every other factor. And trust me that those factors must be perfect. So it's just going to be harder, in my opinion. I just was shocked when I saw it. But we were told that Movement is not following that. We are sticking with 620 FICO needed for conventional and 580 for FHA. FHA can be a little lower depending on circumstances, and we would have to get them manually underwritten, which means just extra work to look at some compensating factors. Okay.
Okay, thank you.
You're welcome. All right. So number 5, has the loan officer reviewed recent pay stubs, W-2, and bank statements? Another question. Hey, when's the last time you collected their income docs? If they're like, 2 months ago. When I do my pre-approvals, I'm collecting everything within 30 days. And if I'm giving you a pre-approval 2 months later, I'm asking before I give it to you, hey, can you guys send me some recent pay stubs or has anything changed with your job? So most of you on this have used me. I'm very, very big on my reputation and people counting on me. I'm not giving you a letter unless I'm 100% sure that this deal is not going to fall apart, because that's just how I do things. Unfortunately, a lot of lenders just are throwing out letters, not caring if deals fall apart. And I just can't believe it, because number one, we're all on commission only. Two, our reputations. Three, nobody wants a deal to fall apart. It's heartbreaking for people, and financially and emotionally. So I just don't want to be a part of that. So if I have to ask for more and do extra work to make sure that pre-approval is solid for you, that's what I'll do. 6, did the loan officer inquiry about bankruptcies, foreclosures, or short sales? This is an iffy. You can ask. I don't know if they're going to tell you, but it's another question with credit. Hey, is it current? Do we have any issues I need to be concerned about? I don't know. You can ask this question, but I don't know if they're going to answer it. Okay. So just know I put it on here because I personally would answer some of it, like the short sale, but I would not be telling anyone that, private information about my buyer, but I could tell them enough to make them feel secure. Make sense? Any questions so far? Anything anyone to add? Nope. Okay. I'm going to keep going. Work history. So 24 months. Every lender needs 2 years. Doesn't mean they can't have multiple jobs. Doesn't mean that they can't have one and a gap. There's a gaps allowed in employment and conventional and FHA. So I've had many agents and buyers reach out to me asking, hey, he just started a new job. The first question I'm asking, is he salary? Is he in the same line of work? So that is definitely a good question. Did you get 2-year work history from them? Did you find that, they have a 2-year work history? So these are just questions you're going to continue to ask, and, maybe even pick out the top 5 that you like that will make you guys feel secure about the pre-approval. Okay. Did they verify whether child support or alimony? That's huge. We definitely have issues with this. People, unfortunately, they lie. I've had people lie, and then I found out through Zelle they're making child support payments, but they don't have a child support agreement, or they have a child support agreement and they're not paying it. This is very important. And if the loan officer is nice enough to answer, it's definitely something you want to be aware of. And also liens. You won't know that till title. But if you have a buyer you guys are talking to, and they're talking about the divorce and alimony, child support, if you feel comfortable enough with your buyer to ask, hey, are you current with that? Is it consistent? Again, that's the loan officer's job, but you could have, it depends on your relationship. Some of you guys have close relationships, some of them family. Again, loan officer's job, but it doesn't hurt to ask. All right, so let's see where we're at here. Okay, this is 9, very important. Are you aware of the property type? All right, so let's talk about property types. Do you guys know the difference between why we would need to know if it's a condo or a single family or something? Do you guys know the difference between these properties?
Association fees.
Association fees. That could be on single family too, but what's the difference with a townhouse or a condo? Nobody? All right.
Would it be the insurance?
So a couple things. Townhouse is a style of home. Townhouse can be a single family. It's a style. But a lot, I would say 8 out of 10 people on Zillow. Now the MLS, that's why I always ask for the MLS. The Zillow will say a townhouse, and then I get the MLS that says a condo. Everybody thinks condo and townhouse is the same. It's not. And number one, townhouse, if it's not a condo, it's single family rate. A condo is always, it's a different type of ownership, always going to be a higher rate. So that's really important that when you're talking to the loan officer, hey, are you aware this is a townhouse? If the loan officer is doing their job, they're asking for an MLS. I will not, especially for making an offer and we're going under contract, I'm like, can I please see the MLS? Because when I'm submitting that contract, I need to make sure that I have the proper type of property because of the rate. Condo, big difference. It's sometimes an eighth over an eighth difference because it's more liability. Okay.
Don't they all have a share in the association, right? All the owners.
Right.
Is that
So
what it
there's
is?
different type of ownership,
Right.
and they all can have HOA, but a condo ownership is different. So that is going to be on the MLS. It's on the bottom right. I know exactly where to look, but a lot of times on Zillow, unfortunately, Zillow is not so great lately. They got wrong HOA, they got wrong taxes. So I'm telling you, I will always ask, but you really, really need to be giving your lenders MLSs for pre-approvals, especially contracts. If you go, the Zillow is not the place to be guessing and getting information. Okay, so I would make that part of your protocol when you're submitting a contract to any lender. Hey, I asked for the MLS and the CRS. I try to get. Sometimes they don't even match with the taxes. So the worst thing a lender can do is calculate taxes wrong and closing costs and everything, because it upsets the buyer. So it's important that we try to give as much accuracy as possible. Okay. Okay. Any questions? Anything? Nope. Okay. We're almost done. We're not going to be an hour. Okay.
Hold on, I have a question. What if they don't have, a lot of people don't have the property yet. So should we then ask the loan officer like what type of property can be purchased with that pre-approval if they don't have an identified property yet?
Oh yeah. So the lender should be pre-approving them on. Oh, like I tell people, I ask questions. Say, are you looking for single property or condo? They're like, well, whatever. I'm like, okay, well, here's your budget. But if you go from single family with no HOA and you're going to a condo with HOA, I need to know. So what I do, and a lot of lenders don't, but I just think it's important. When I do a pre-approval, and the ones of you who've worked with me know, before you even have your person look at the property, send me the property and I'll crunch the numbers. Number one, make sure that they are okay. And I also tell the buyers this. So make sure that they're okay with the estimated payment, because I'll tell you right now, some of these people look with their eyes and their heart and not their wallet. They go make my agents go 10 houses and they don't even qualify for 5 of them. They might qualify, but when they find out the monthly payment with the HOA, it's a waste of everyone's time. So what I tell my lenders, I'm sorry, my agents and my buyers, let's do a group text before you go shopping, before you even go look at the property. It takes me 2 minutes to plug in your file, taxes, HOA, sales price, and give an estimated payment. That knocks down time that you guys are spending taking them to properties that are not in the budget. Make sense, Casey? So you should be able to call the loan officer and say, hey, we have a couple properties. Here are the numbers. Can you crunch these? If they say no, find a new loan officer, because any loan officer should want to crunch those numbers, but some don't. I personally think it's important, because why would you waste your time going to see something that is not in the budget? I have many buyers who went out looking and I'm like, well, you didn't crunch the numbers, but this is the payment. Oh, I didn't know. I go, and I don't mind doing that, but some lenders won't do it. They'll give you a budget and that's it. But I have no problem crunching numbers for any property before you even see them. Okay. Does that make sense? Okay. So number 10, contingent on a sale of a property. This is huge. You guys should definitely, if you're not talking to the buyer, if they're buying and selling, you need to ask that loan officer. Number 1, can they afford both? Number 2, are they using the proceeds for the new house? Sale contingency is huge. That should be, I'm sure, part of your, I'm sure all of you asked that, correct? Your buyers, if they're selling and buying, right? I would think that's part of your buyer's consultation. This is huge. And sometimes people can afford both. They don't even need to sell. I've had people where they didn't need, their debt to income was fine. They didn't need to sell. So they kept one as an investment and they bought a new primary. And then 6 months later, they sold the other one and they did a recast with me, and they took a lump sum and redid their loan and lowered down the loan amount. That's a really nice thing that you can do. If you want to make a large, more than 10,000 payment on your loan, it's called a recast. So I do that a lot with the sale contingencies, especially if they don't close the same day. And if they are closing the same day, you guys really need to do your due diligence and making sure title and everyone's aware that we have 2 closings. And you should always close, of course, the one that's selling in the morning and the one you're buying the latest you can in the day, so that the proceeds can be wired, because sometimes they're not wired very quickly. Okay. Have any of you had 2 closings in one day, buying and selling? No, nobody? Robin? How did that go, Robin?
So it went really well. I partnered up the title companies. So there was always that constant communication, which was key to everything. And one was in the morning and the other one was in the afternoon, and it worked really well
Yeah.
because the
If you
title
can keep those
companies
title
just stayed in
companies,
communication with each other.
yep, if you can get those title companies on board ahead of time, it can go very, very smoothly. Unfortunately, I was in touch with them. We were everything, and for some reason, the title company forgot, and I was calling them frantically for hours during the day because we were closing at 4 o'clock, and it was 2 o'clock, and we still didn't have the wire. So unfortunately, not everyone's always, cooperative, but you got to stay on top of it in case you have that kind of situation. Number 11, just like I said, you need to know if they own other properties and are they a co-signer on another property. A lot of people, this is my famous thing. No, I don't own any property. And then all of a sudden they mention something about taxes and insurance on their property. People think that if their loan is paid off, they don't have a property. Believe it or not, when I say, do you own any properties? No, it's paid off. Well, you still own it and you still have to pay taxes and insurance. I have to count those taxes and insurance as a monthly debt. I can't even tell you, 9 times out of 10, people think that if your house is paid off, that we do not have to count the housing expenses and their debt to income. We absolutely have to. They're paying their taxes and insurance, and we're counting them, and I have to get that information. So super important. And people who have co-signed. People co-sign for people and don't realize if they co-sign, they're not a first-time home buyer anymore. And 2, they are liable. So if Casey co-signs for Camille on her mortgage, guess what? Something happens, Camille doesn't pay it. Casey, you're gonna get your credit ruined, and you're liable for that payment. Okay. If Casey comes to me and Camille bought the house 5 years ago, and Camille can give Casey 12 months of bank statements showing that Camille's paying that mortgage, we can take it off as a liability. It has to be 12 months of statements coming from Camille only, not a joint. So for instance, Casey, let's say you have a 25-year-old child and you co-sign for his home. Okay. And they've been paying it out of their own checking account for over a year. We can discount that as long as we have proof that they're paying it from their own account. It cannot be a joint account with your name on it. It can't be an account from anyone but them. And that goes for any installment loan, a car loan, a student loan. We can take that off as a debt if we can show 12 months of consistent. That means 12 bank statements showing that they're paying it. Does that make sense? Have you guys heard of that guideline before? No? It's huge. It's a huge guideline because many people, oh, I'm never going to qualify a co-sign for my son's loan or their car. And I'm like, well, when'd you do that? Oh, a couple years ago. Have they been paying it on their own? Yes, I can take it off. They're shocked. So if your buyers are like, oh, I can't buy, I did this. Hey, talk to my lender, Maria. We might be able to help you out. That might not count against you. But always say might, because until I speak to them, we don't know. And I've had people tell me their child has been paying the payments. And then I just had this happen last week. The woman swore on the phone, my daughter pays it out of her own account. I said, I need the statements. And the statement was her and her daughter's statement. She literally swore up and down. I said, your name's on the statement. Oh, and that's why I don't take their word for it. I get the documents. I said, I cannot take this off. It's getting taken out of both of your account. She's like, I'm sorry. I'm gonna say it's okay, but this could have messed up the whole loan. So that's super important. Do they own properties? They buy an investment? Are they buying primary? And have they co-signed? That's another question you can ask the other lender too. But this is stuff that you probably are going to have some conversations with your buyers, right? You got to ask them questions of what they're looking for. So I'm sure you're going to get this information. Okay. This is a good one. Commitment. Have any of you ever called a lender and asked them how fast they can get a commitment? No one? I can't see everybody on the screen. I don't know if anybody's raising their hand. Okay. This is huge. You guys know a commitment. So commitment, if you're closing fast, getting a commitment is huge. getting it up front. So I think most of you guys know that we do upfront underwriting. So in the state of Pennsylvania, to get a commitment, you have to be underwritten, but you don't need an appraisal, which means I can give you a preliminary commitment without the appraisal being done yet, which shows you that the loan has been approved upfront by an underwriter. It has been reviewed. And then, of course, we'll get an updated commitment once the appraisal is done. If you're not getting that type of service from another lender and their underwriter is not going to look at this file until 3 weeks in the process, that's a problem because we do it within 48 hours. The underwriter is assigned to the file and has to approve it up front. This is a huge, huge thing. Many lenders do it, but also many lenders say they do it and they really don't. They'll put it on their letter, but they don't. They just make it look like they do. Okay, so that's really important when you're reading those letters. Does it say this has been approved by an underwriter? Does it say this will be reviewed by an underwriter? I've seen them all. Does it say it's gone through desktop underwriting? Listen, guys, anytime you have a pre-approval that looks a little sketchy or doesn't look really compliant, text me a picture of it. I'm happy to look at it and let you know what I think. But there's a lot of people putting pre-approvals out there that literally are typed up and not compliant and they're not accurate. And you guys really need to make sure you got accuracy with your buyers, okay? And then the last question, you absolutely can ask these two questions. How quickly can you get a commitment to me? And when will the loan be reviewed by an underwriter? Very key words, reviewed. And if they say, well, what do you mean? Well, does he look at it within the first week, first couple of days, or does it look at it after you process the loan? When I worked at Wells Fargo, I wasn't allowed to talk to an underwriter, barely the processors. It was just a rough experience. And that's why I appreciate movement so much. My first year in mortgages with Wells Fargo, and like I had no idea what was going on my loans. And they did not look at the underwriter would not look at anything until weeks into it, processing the loan, getting all this stuff. And then we find out they're not approved. So didn't stay long at there, but with movement, I can't even tell you how proud I am. Not only do we approve it up front, we do all the other free stuff of the self-employment, the variable income. It is so valuable. That's why I love my company, because we do a lot of stuff that other lenders don't do to make sure you guys have nice, smooth transactions and deals don't fall apart. I can honestly say in 10 years, the only deal fell apart for me was when someone went and bought a BMW a week before closing, which I told them not to do. And they did it anyway. And, they messed up their loan because of the debt to income. So it's really important you guys have these conversations with your buyers. If you want this, just send me a text. I'll be happy to email this document to you so you can remember. I do have one more question. I want to know if you guys are actually looking at the commitments when you're getting them. Be honest. Oh, some people in the chat. Let's see what I'm missing. Put it in the chat. Put it in the chat. All right. Why is it important? This is current. I know it's a silly question. Millicent, why is it important that it's current? Where can I rewatch this recording? Yes, please. Okay. All right. Let's see if I can get this in the chat. How do I attach the document? Is that it? Let me see.
This is even something that you can put like in your listing agreement when you're going to talk to people. Say, hey, look, I'm going to call the buyer's lender, and these are questions that I can ask the lender just to make sure.
Yeah, it's very, very good. I don't know if I uploaded the right one. Hold on a second. 1 second, guys. I have so many different variations of this letter. Can you guys open up what I sent and tell me if it looks like this? I'm having trouble here. If it doesn't, let me know. I'm going to resend it. I'll relabel it.
I didn't get anything.
Nothing in the chat?
No, just the last comment.
That's weird.
Let me see, make sure.
That's weird.
Not there.
No, it's not there.
All right, let me try one more time.
If you have a soon to be born. Oh, okay.
All right, let me try again. How good. Let me know if you guys get this. Let me know if that came through.
There you go.
Beautiful. So this is really good for you guys to keep. Okay, last question. Who's reading their commitments? Be honest. Yes or no? Do you know how to read a commitment? Gotcha. All right. Super important. Commitment. It's going to have a bunch of conditions on the bottom of it. So my preliminary commitment obviously is going to have more because we just started. And then as we go through the process, get the appraisal done, by then, many of those conditions will be gone. But if you guys are getting commitments a week before closing and you're seeing 20 items on a commitment, you need to start calling that lender, because some of them are not going to disappear. You're never going to get a commitment with nothing on it ever, because final things have to be done right before closing. But if you're seeing commitments, because I did how to read a commitment class that is also on YouTube. You guys need to look at your YouTube classes for Colleen, the link, my how to read a commitment recording. This class is going to be recorded, Millicent. That's always on the KW YouTube site. All classes that are recorded are on there. You can literally watch them, but you need to see if you can look at my how to read a commitment. Super huge, because if there's items about IRS or child support on that commitment letter at the bottom, we might have some problems. So I highly recommend you look at my recording of that class of how to read them and which commitment conditions are something to be concerned about. You guys need to be reading your commitments. Super important. Just because it says commitment does not mean you're out of the woods. There's many things on a commitment that could be a huge concern. Okay. Super important. All right. I'm pretty much done. I want to know if you have any questions, any feedback. Did you learn anything new today? Anybody want to?
Yes.
Yes on everything? Is there any? Yes, Brianne.
Hi, I just had a quick question. I have a close friend of mine who wants to buy a home not until a year out. I know that pre-approval is only good, right, for about, is it 90-ish days, 3 to 4 months?
Okay.
What do you do a soft pre-qual? Like, should I send them to you now or?
I would rather just talk to them, and I would not want to pull their credit a year ahead of time. Have a
Okay.
conversation with them. No reason to hit the credit if we know they're not buying right away. So the first thing I ask is, when you're looking to buy, if they're like, oh, in a year, then we're going to talk about a plan. I'm going to ask about their scores, ask about their income, make sure that they're, a good candidate, money saved up. And then we're going to have a conversation of, hey, this is your homework. And in 6 months, come back to me and we'll start maybe the pre-approval process. I do not like running people's credit if I don't have to. When it comes to soft pull, I'm a little old school. I don't do soft pulls, and I'll tell you why. Soft pulls are dangerous, in my opinion. I've done them. Soft pull is when you pull one credit score. When you have a contract or a pre-approval, you have to have 3 credit scores. Does anyone know the rule of what credit score you use out of all 3?
Isn't that the lowest one?
The lowest?
Nope.
Yeah.
Nope. It
The
is
average
middle
of all
score.
3?
The
The
middle
medium.
middle
The middle
score.
one. Oh,
See,
okay.
everybody learned something new. So when you do a soft pull, I'm not getting all 3 scores, so there's no way for me to know the middle. Number 2, I've done it, and his scores were like in the low 6s, and I'm like, listen, we really need all 3 scores, because if you're under 620, you're going to be FHA. No, I'm definitely over 620. I said, listen, I just want to do this right. And, I tried to convince him. He would not let me re-pull it and do a hard pull. He went under contract. Guess what? His credit score, his mid score was under 620. And I had to go back putting my tail between my legs, and I had to go back to the agent and say, he has to go FHA. We all know we don't like when people switch things up. And I said to myself, I will never do that again, because now it's my reputation and my validity. So I tell my buyers, listen, we have to do a hard pull. Number 2, when you do a soft pull, this has happened. We don't get all the liabilities. When you pull all 3 scores, the law states the middle score. And when you don't do that, you take a risk of not having accurate scores, which affects your program, and 2, not having all the liabilities. I did a soft pull for another person a year ago. There was no car payment on it. And then when he went under contract, bing, there's a car payment. Oh, because I always review the liabilities, and he never said, I have a car payment that you didn't mention. And then it was okay because his debt to income was okay. But again, those of you who worked with me, I'm huge on being accurate. I will not do a soft pull. I won't. And if they don't like that, then I'm doing it for their benefit and your benefit. And it's the middle score. Now, to answer your question, a credit score lasts 4 months. Hold on. I'm having a coughing fit. How do I mute this? Okay, I'm better now. Too much talking. 4 months, Brienne, the credit report expires. When I do my polls, I tell people your credit report has expired in 4 months, but my pre-approval does last quite a bit. Some places will make you keep refilling it out. My pre-approvals last a year in the system. And then every 4 months we have a conversation. Hey, are you going to continue looking? Do I need to repull? Oh no, you know what, Maria, I'm going to hold off. Okay, come back to me, and then we'll repull credit. We'll get some current docs, and with me, they never have to fill it out again. And they love that because many people make them refill it out. So your answer is going to vary with every lender, but with me, it is good for a year with the current credit report. So if the credit report is expired, then I will talk to them about repulling. And, if they change jobs, anything, I'm always saying, hey, before I give you an offer letter to make an offer, I'm asking the buyers, just making sure everything's status quo, nothing's changed, still got the same money in the bank. If it's been several months, I'm going to ask for updated pay stubs and bank statements, because when I give you a pre-approval letter, I want to make sure I'm giving you something that's 100% accurate. So does that answer your question, Brienne?
Yeah, thank you so much. I think that was super helpful. Really, I think that I'm gonna tell them to contact you regardless, just to see how they're looking.
Yeah, I'm telling you, there's nothing better than getting prepared. I give people homework. I tell them how to prepare. They just have no idea. And I've had many people come to me a year later, ready and did everything I told them to do. Don't open new accounts, save up as much money as possible, because you never know how much it's going to cost. You can't be guaranteed, a state program. It's not always 100%. And talk about their jobs. So yes, definitely connect me and let them know, hey, she's just going to guide you through the process. She's not going to run your credit. She's just going to educate you. That's very important to get educated.
Perfect. Thank you.
All right. My mouth's getting dry. I'm going to start coughing. So I'm going to shut this down unless anybody has any other questions before I have another coughing fit.
Thanks, Maria.
Thank you. Great job. Thank you.
Thank
Good,
you.
good
Any
information.
questions? Thank you.
Thank you.
You all have the letter. Any questions? You guys need anything? Let me know. I've worked with most of you already, but I'll be happy to work with some of you in the future.
All right.
All right,
Take
guys.
care,
Have
everybody.
a great day.
Bye.
Thanks.
Bye.
Bye.